Hey guys, what is up? This is going to be a very chill educational video. This is not a new strategy or new thing. It is the old strategy, but I'm gonna teach you something that's gonna improve your win rate. So, for example, if you were getting around 40% win rate, you are gonna get around 60%, 65, and even 70%. This is a very powerful technique that most people sleep on. They just avoid using this because they are lazy. And I know a lot of people who trade are lazy. They always opt for the easiest methods to make money with trading. But if you can implement this one small thing that I'm about to teach you in this video, I promise you your win rate will go higher. So by now on my YouTube, you may have watched external range to internal range liquidity videos, right? Now they work phenomenally well, and that is like my bread and butter model, right? I use it every single day, and if it's present, I'm gonna trade it without thinking anything else. But I've been implementing this one small tip that I'm about to teach you in this video, and in my recent trades, I've been implementing that in my recent trades, and it has helped me significantly. So let's suppose that on EU, we took out ERL on the daily time frame. So remember the time frame alignment, right? We have the daily time frame, then we have the 1 hour, and then we have the 5-minute 4-hour entry. And this is the time frame that I trade. You can trade the weekly 4-hour and 15-minute and other ones that I've taught before. I'm not going to go into detail in that. So I trade this one most of the time, this time frame. So on the daily, I look for ERL purge. Once that happens, normally what I would do is I would then look to target this fair value gap after confirmation. So once the ERL was taken, I would then look for a market structure shift on the 1 hour time frame, and then I would wait for price to come back into the 1 hour PD array, then look for another market structure shift on the 5-minute, and then we target this low, right? But for me, that is just so much work, right? To look for like two market structure shifts. That is something that a lot of people just, and I'm not gonna lie, I'm quite lazy myself. I always opt for the easiest methods, but you know, trading is hard. If it was that easy, everyone would be rich. So what I mean by this is the thing I'm about to teach you is called the SMT divergence confirmation. All right. Now hear me out, okay? I'm gonna teach you the exact way to use this, and that's gonna just blow your mind how well it works. Okay, so instead of looking for, you know, the 5-minute market structure shift as well, what you want to do is on the daily time frame. So there are two ways to use this technique, so listen very carefully. On the daily time frame, you first of all look for SMT. So basically, if you're looking at your USD, you would look at GU, right? So let's assume that on your USD, we took out the high, we took out the external range liquidity, and we have internal range liquidity here. But on GU, what happens is we create a high, but then we fail to create it, to take it out. So on EU, we took out the high, we took out the external range liquidity, but on GU, we failed to take out the external range liquidity. Now that, my friends, is SMT divergence, but SMT is not confirmed yet, all right? So to confirm the SMT, what we will do is we will look for 1 hour market structure shift on your USD before price takes out this high. So let's suppose that the market structure shift doesn't happen on EU, right? And after some time, price takes out the high on GU as well. And on EU, we didn't get market structure shift. Then that SMT is invalid. However, if price stays below this high, and then we get a 1 hour market structure shift, as soon as that happens, your SMT is confirmed. So that is a perfect SMT. That is confirmation that we are going to go down. Now, once you get the 1 hour market structure shift, instead of looking and dropping down to 5-minute time frame to look for another market structure shift, I'm gonna directly enter from the PD array that is presented to me on the 1 hour time frame after market structure shift. So that would be my entry, and I'm gonna take some partials along the way, and then I'm gonna target this as my last target. Now that is one method on how you can implement SMT divergence into your trade. But most of the time, what's going to happen is you will not get SMT on the daily time frame because that is a very high time frame, right? It's not the highest, but it is a high time frame. And looking for SMTs on the daily time frame can basically be quite hard. Not hard, but it's very, I wouldn't even say rare, but it happens not that much. All right, it happens, but not that much. So you do not want to be sitting on your hands and looking for SMT on the daily time frame. Yes, of course, if you look at all these other pairs, you will definitely find 2 or 3 setups per week, and sometimes even more. But let's assume that you do not get SMT divergence on the daily time frame. So what you would do is then you would normally look for a 1 hour market structure shift. Now what that does, it confirms the bias that we're going to go towards the internal range liquidity. So remember, price only does 2 things. It goes from external range liquidity to internal range liquidity, or from internal range liquidity to external range liquidity. External range liquidity is every single high and low, and internal range liquidity is a fair value gap. All right, every single fair value gap. So now that you get a market structure shift on the 1 hour time frame, then you can look for SMT on the 1 hour time frame. So this is how it's going to look like. All right. So basically, price creates another high on the 1 hour time frame. So you get a market structure shift, and you also have a buildup of liquidity or a high, right? And then on EU, we go up ahead and we sweep out this high over here. Now, once we sweep out that high, we want to look at GU. Did we sweep out the high on GU as well? So let's suppose that this is GU, right? If we haven't taken out the high on GU, but we took out the high on EU after the 1 hour market structure shift, then that could become an SMT divergence. But we will drop down to 5-minute time frame, and then we will look for a market structure shift that is going to confirm the SMT divergence, guys. Listen to me very carefully. What I'm teaching you right now, I know this may sound a bit complicated and useless to some of you, but I promise you it works really, really well. I'm going to give you guys a couple of examples as well. Please listen to me, implement this in your trades. No matter what model you are trading, just do this. Okay? So you would then look for a 5-minute market structure shift. And once you get that, you target this as your first target, the 1 hour low, and then you target the daily time frame internal range liquidity. SMT divergence is basically a cheat code in your trading model. If you use it, your win rate will go higher. Who doesn't like a higher win rate, guys? Okay. So that is pretty much it. Just look for SMT divergences. There are 2 methods. The one is looking for SMT on the daily, and then the other is looking for it on the 1 hour time frame. Now let me give you guys some examples. All right, guys. So here is example 1 on how I would trade this entire setup, right? So on your USD, you can see that we created a higher high, higher low, and then a higher high. But if you look at the same highs and lows that were printed on GU, so we have this high over here. So this high is this high on EURUSD. But notice what happened here. We failed to take out this high on GU, but on EU, we took out this high over here. Now the SMT is still not confirmed. So to confirm it further, you can also see that after we took out ERL, we had this fair value gap in the discount, right? So that is our draw on liquidity on the daily time frame. Now, of course, SMT is still not confirmed. Why? Because we want to see a market structure shift on the 1 hour time frame, right? So let me just mark this out real quick. Let's drop down to 1 hour time frame here. So you can see it right around this level. What do we have? We have a shift in the market structure, and we still failed to take out the daily high that was on the GU. So our SMT divergence is confirmed. Now, what you can basically simply do is just take your entry from any inefficiency that is present, right? So you can basically see we have this fair value gap that you can have taken your entry from. Now, if we look at it here, so let me just do the analysis correctly. Okay, perfect. So we have another SMT on the the 1 hour time frame, right? So let me just show you where it is. So if you look at it here closely, this high on EU, right? And also look at this high on GU. Now, if I mark this high out like that, you can see that this high was not taken out on GU. So let me just go here real quick. This is the high, right? And it goes to this level. All right, perfect. And also somewhere around here. So this was a SMT on the 1 hour time frame as well. Now to confirm that SMT divergence, what we would do is we would simply drop down to 5-minute time frame to confirm it even. Now, since we had SMT on the daily time frame, we can basically take our entry directly from this level, right? You can also see we had this auto block here that you can have taken your entry from. But now let's drop down to 5-minute time frame and see what happened. So if I zoom out a bit like that, you're gonna see that this is when we were not in the kill zone time. So remember, we want to be taking our entries since we are if we are trading on the 5-minute, we want to be trading during the kill zone hours. That is very important, right? And you can see that we have a bunch of liquidity here, and we have original consolidation just around here. So that is a bunch of liquidity buildup, equal lows around this level, and also the market maker model is present here. So now you can clearly see that we got our shift in the market structure somewhere around here, right? After we tapped into that PDR rate that we discussed before, and that makes the win rate, the probability even higher. So just around here, first of all, what do we have? We have the change in the state of the delivery. I do not recommend that method. I always wait for the lows to be broken for a market structure shift to be powerful. Change in state of delivery is also good, but I always recommend that you look for market structure shifts. So now, what do we have here? We have a breaker block, and of course, this is with the benefit of hindsight, right? It could be different if you are looking at it in the live markets, right? You might be taking your entry somewhere around here or here, but I'm showing you how well it works. So we have a breaker block, right? Look at the precision here. We tapped right into this, and we had a beautiful drop to the downside. So if you took your entry on the 1 hour time frame, you would be fine, right? You would absolutely murder it. So let me just short it right here. Each stop would go right above the auto block, right? And you could have basically taken 1 to 2 or even 1 to 2.5 because this is our draw on liquidity around here. So I know this is too much to consume, but if you have been watching my old videos, this should be easy for you, and this should be easy for you to understand. Look for SMTs in the key levels. So for example, when ERL is taken out, right, look for the SMT first of all on the daily time frame. If the SMT is not present on the daily, then look for it on the 1 hour. And remember, SMT is always confirmed when you get a market structure shift on the lower time frame. So for example, if you get SMT on the 1 hour time frame, you would look to confirm the SMT by dropping down to the 5-minute time frame and looking for a market structure shift before the other pair or asset doesn't take out the high, right? So for example, if this high was taken on EU, you wouldn't expect GU to take out the high before you get a market structure shift. Otherwise, the SMT will be invalid, guys. So let me give you guys one more example. All right, guys, so here is another example looking at NAS 100 and US 30. So here are some correlating pairs that you can look for SMTs on, right? So for assets, you would look at NAS 100, S&P 500, and US 30. Whichever one presents the SMT, you can use these three to find SMT. Now for the Forex pairs, you can look at your USD and GBP USD. You can also look at DXY. You can look at AUD USD and NZD USD, right? You can look at AUD JPY and NZD JPY. You can also look at GU JPY and USD JPY, right? So just try to pair them up and you will find SMTs. So in this example, you can see that on NAS 100, we took out ERL, and just above it, what do we have? We have IRL. So now we want to look for SMT somewhere around here. So if you look at this low here on NAS 100, this is the low, but on US 30, this is the low, right? So you can clearly see that on NAS 100, this low was swept, but on US 30, it was not swept. Now, we want to look for a 1 hour market structure before we can confirm that this is an SMT divergence, right? So if I go to the 1 hour time frame here and I just zoom out a bit, you can see that just around here, your SMT divergence would be confirmed, right? So around this level, your SMT is going to be 100% confirmed. Why? Because on NAS 100, we took out the ERL, but on USD, we failed to took out the ERL. So that is SMT divergence. Very simple. There's literally nothing complicated about it. So right away, you can see is you can basically directly enter, all right, directly enter into the trade without dropping down to the 5-minute time frame. Why? Because we got SMT, guys. This is literally all you guys need. We have equal highs over here, which lead into the IRL on the daily time frame. So on the retest of this auto block plus breaker block, right, whatever you want to call it, you would take your entry. And of course, the risk reward is quite less on this trade. So what you would practically do, there are two things that you can do, is basically reduce your stop loss to this low. Why? Because once this low is swept, there is a very less chance that price will come back again to sweep this low. Or what you can do is target the 50% of this range. So that would be somewhere around here. So you can see just around here, that would be a perfect target. You can basically put your stop here. That would give you 1 to 2 risk to reward ratio. So I hope by now everything is perfectly clear, guys. I really suggest that you guys use this technique in every single model that you trade. Just look for SMT to confirm your market structure shifts whenever price comes into some form of PD array, or whichever model you're trading, just implement SMT and you will thank me. So thank you so much for watching, guys. Before I end the video, I just want to quickly let you know that my brand new course, the Fast SMC 2.0 course, is coming out very soon. It is already up for the old Discord members for absolutely free. So if you join right now, if you become a member of my current course plus Discord, you will get access to my new course for absolutely free. But once the new course is out, it will be sold separately. I'm not telling you to buy it or anything. My YouTube videos alone will get you funded and everything, but if you really want to like connect with me and watch something that I have never revealed before, or watch the videos that are in correct order, so from a proper guide from beginner to advanced, then it is for you. Anyways, I'll end the video right now. Thank you so much for watching. I'll see you guys next weekend.